Welcome back to our channel, where we delve into investments. Over the past 6 months, Indian stock markets have been on a noticeable downward spiral. If you've been tracking the Nifty 50 or Sensex, you might have seen them shed significant value, around 9% over this period. So what's behind this slump? In this video, we're breaking down the key reasons India's stock markets have been trending downward and what it means for investors. Let's start with corporate earnings, or rather their lack. Over the last couple of quarters, especially Q2 and Q3 of FY25, Indian companies have posted some pretty underwhelming results. According to recent data, earnings growth has hit a wall, dropping by 8% year over year, marking the weakest performance in 17 quarters. Sectors like consumption and financials, the backbone of India's market, have taken a hit. When companies aren't delivering, investor confidence takes a nosedive, and that's exactly what we've seen. After years of sky-high expectations, these lacklustre numbers have forced a reality check. Next up, foreign institutional investors, or FIIs, have been hitting the exit button hard. In 2024 alone, they pulled out a staggering Rs 2.96 lakh crore from Indian equities. October was the worst, with Rs 114 lakh crore fleeing the market, the highest monthly outflow ever. Why the rush to leave? Other markets, like China, started looking more tempting after their government rolled out massive stimulus packages. The Shanghai Composite, for example, edged up 0.23% in early 2025, while India's Nifty 50 tanked 13% over 5 months. In addition, India's budget tweak in June 2024 hiked long-term and short-term capital gains taxes. And suddenly, India wasn't the golden goose for foreign funds anymore. They've been redirecting cash elsewhere, leaving our markets in a lurch. Then there's the Indian rupee, which has been sliding against the US dollar. A weaker rupee doesn't just hurt your wallet when traveling abroad. It hammers companies with foreign debt or imports, cutting their profits. It also makes Indian stocks less attractive to global investors when the dollar flexes its muscles. This ties into what's happening overseas. US bond yields are climbing, and the Federal Reserve paused rate cuts in January 2025 after inflation worries crept back. A stronger dollar and higher yields pull money away from emerging markets like India. It's a classic playbook move. Speaking of global headaches, trade tensions are back in the spotlight. With Donald Trump taking office in early 2025, tariff threats are looming large. India, which sent $35 billion worth of goods to the US in FY24, could feel the pinch if those tariffs kick in. Analysts warn that this could dent India's export growth, which is a big deal when GDP forecasts are slipping from 6.7% in FY26 to 6.4% in FY25. Uncertainty like this spooks markets, and India's no exception. Now let's talk valuations. Indian stocks have been on a tear for years. The Nifty 50 has been up over 200% since March 2020, but by mid-2024, those premium prices started looking shaky as economic signals turned sour. Investors saw a chance to lock in profits, and they took it. Mid- and small-cap stocks, which had been investor darlings, got hit hardest. The Nifty Mid-Cap 100 dropped 20%, and the Small-Cap 100 fell 23% in early 2025. It's a textbook correction after a long bull run. But it's not all doom and gloom. Domestic retail investors have been a silver lining, pouring money into the market through SIPs, systematic investment plans, which hit record highs in 2024. That steady inflow has softened the blow, but it hasn't been enough to counter the FII sell-off or the broader economic pressures. So where does this leave us? India's market has been down 9% in 6 months, lagging behind global peers like the US, up 12%, and China, up 24%. Volatility will likely stick around until corporate earnings bounce back or global uncertainties cool off. It's a tricky spot for investors. Do you see this as a buying opportunity or a sign to stay cautious? Either way, the next few months will be telling. What do you think? Will India's markets rebound soon, or are we in for a longer rough patch? Thanks for watching. If you enjoyed this analysis or want to stay updated on investment opportunities in India or Asia, don't forget to like, subscribe, and hit the bell icon for notifications. Drop your thoughts below, and let's keep this conversation going.